I believe you can all see. Please, and one thing is that I always want the class to be interactive, okay? Because it's online, network issues and stuff, sometimes we may go off. I want frequent responses. Do you understand? Yes, sir. Sir.
Yes, sir.
Question. So I know we are not going off. But anytime you just keep quiet and be listening, sometimes I get bored. It makes me tired.
Yeah.
And also when my network goes off, I wouldn't know, right?
Wouldn't know.
Just to assist me, I think the responses should be coming, right? I like it that way. The more it's interactive, the more we do more dialogue, we speak, bring your experiences from work, what you've done. I think it helps people to learn. That's how learning should be. But the Ghanaian style of learning has been like lecturer is talking, we are all quiet, we finish class. No, my system doesn't work like that. We do activity-based learning. So you chip in. Sometimes I'll ask you who has had an experience in this field before. If you have had, feel free. The more you talk and interact, the more you will make it because it gets stuck there. Is that okay? I hope that is fine by everyone. Okay. So let's look at paper 2.6. Actually, do you know why principles of tax is the last paper? Now, we believe that by doing principles of tax, you have had all the requisite knowledge in accounting, audit, and other fields, right? Financial management. And you know, tax encompasses all those things. Why? For instance, if I'm computing penalties, I need to know the time value of money. Do you get it? And I believe that you would have done financial management, right?
Yeah.
If I'm doing fiscal policy, the assumption is that you have done public sector already. Do you get it?
Yes.
If I'm doing computing income tax liabilities, when I see profit and loss account, I have to add back. The assumption is you've done financial reporting, right? If you see budget information, you have to work it. The assumption is that you've done management accounting. So one thing ICA students do not know is that the papers are structured in a way that if you do paper 1 up to paper 6, that knowledge should help you in the papers that are up ahead. If you don't do reporting and you are doing management accounting, you find a lot of difficulties because there are some principles of accounting that still go into management accounting. If you are doing audit and you haven't done reporting, there are some principles in audit that you need. If you are talking about audit risk, then there's a potential that an accounting issue, are you getting this, is causing the risk. If you are doing repairs and improvement, there's a risk that you may have wrongly capitalized revenue expenditure or you may have wrongly expensed capital expenditure. How would you know this? From learning reporting. Do you understand?
Yeah.
Because tax is still accounting, but it is tax accounting. It is accounting from the perspective of the country, from government. Government accounting is taxation. Then the normal financial reporting is what you are doing per principle. So when the two clash, that is where we have to learn and know the principles that government accepts and what your accounting or general accounting rules also accept. Are we okay? So that is what taxation is actually about. Now, before we even begin looking at the principles, okay? Now, can you all agree with me that government has provided a safe environment for people to do business?
Yeah.
There are no wars, right? Do we see wars in Ghana? No, there are no. You can easily do business. You can even go and sue somebody, right? Now, somebody provided that safe environment for you, right? To do business, do economic activity. Your fair share, right, of that safe environment that you can also provide to government is what we call taxation or tax.
Taxation.
People do not understand tax this way, but that's why they find it difficult to pay tax. Assuming there were wars, people are running helter-skelter, then the government hasn't done their job. But so far as people only think that they should pay tax so that government will use it to build things. Government are not using their taxes well. But there's one aspect of tax people don't talk about. The safe environment we have in Ghana is alone one of the reasons why you should be compliant. Because if soldiers are not paid well, the same soldiers can attack us. You know that. People don't think about these things. So one thing is that for effective administration of every country, taxation becomes an important principle, an important factor. And there's a quote that says, well, there are two things certain in life. One is death and two are taxes, right? These are the only two things that are certain in life. Apart from that, there's nothing certain in life again. Death and taxes are certain. Okay, so that's a little I wanted to leave with you. So let's look at the principles of taxation syllabus. Okay, so principles of taxation introduces the Ghanaian tax system and describes how taxes are administered by the Ghana Revenue Authority. Okay, so today we'll be looking at some of these things. Now, this outlines the basic principles of taxation for individuals and corporate entities.
It's Emilia.
To outlining some
Emilia.
in addition to outlining key aspects of taxation of realization of assets, value added tax, and custom duties, and withholding tax. Okay, so you see these things that we are seeing. Where is it? Are the various topics that you are going to see in your syllabus, right? It concludes with an introduction to impact of information technology and importance of what? Ethics. So these ones are all topics that you are expected to know. So in every syllabus, right, the preliminary, like the preview that you are going to see, okay, you will see that it has all the things you have to know. And once you know these things, trust me, you're not going to fail because these are the key themes and we'll come and look at it. Now, the model has syllabus references, okay, and this syllabus reference that we are seeing, they are grades. There's a grade or there's a weighting, and the weighting are marks. I don't see it as percentage. I like it as marks so that you know each and every topic that you are going to see, the marks you are going to get from there. So I will not look at it here, but I'll rather look at it here. First, we must look at the Ghanaian tax system and fiscal policy, right? And the Ghanaian tax system and fiscal policy, how many marks do you see there? I want you to write it in your book, the very first page of your notebook for tax. How many marks do we see there? How many marks?
10 marks.
10 marks. It means that every single diet you will say, the Ghanaian tax system, which includes the various taxes, the classification of taxes, what is tax, the economic and social objectives of taxation, direct and indirect taxes, obligations of taxpayers, the role of GRA, these things, and fiscal and monetary policy is 10 marks. Okay, meaning a question that will come from there will always carry 10 marks. And it doesn't mean it will be 10 straight. It can be 10 straight. It could be 2 marks. It could be 5, right? So this thing can what? Be examined in several ways. Are we okay? Then the next is tax administration. Tax administration is a very broad area, okay? Don't joke with tax administration. It's also 10 marks, right? So we'll look at tax administration, including the role of GRA, the processes in tax administration, taxpayer registration, taxpayer identification. We are going to look at practice notes, private rulings, sources and practice of tax law. We are going to look at proceedings, objections, systems of assessment. We'll calculate installment taxes. We'll solve past questions on installment taxes. This diet, you'll be getting installment taxes. Are we okay? So I'm giving you all the stuff. So we'll look at income tax liabilities. And you see, if you look at all this grade, which ones have the hugest marks? Look at the grade. Which one has the hugest marks? For me, I always give students the mindset. Yes, tell me, which ones have carry the hugest marks?
Income tax liabilities, corporate tax liabilities, value added tax, customs and excise duties.
Yes. So income tax liability, you can see the 15. Corporate tax liability for companies, 15. You have what? VAT and customs, 15, right? Okay. Now look at this. If you put all these areas together, you have about 45 marks, right? And every tax course that you do everywhere, right? Be it is ICA, CIT, everywhere. These are the key areas, direct and indirect taxes, right? Yes, there are other areas which are very important, but even those other areas, their foundations are around us. Withholding tax is on its own, but withholding tax forms part of income tax liability and corporate tax liability. That is why they've separated it. You cannot do income tax liability, corporate tax liability, and VAT without withholding taxes. You cannot do income tax liability, corporate tax liability without capital gains. Do you get it? So the reason why the syllabus has separated them is because those areas are something we call, I can't say miscellaneous, they are preliminary areas. They are prelims, right? That you need to be able to do these ones effectively. So capital gains 10 marks and withholding tax 10 marks, you need it. for these other areas. So any other area apart from this 15, 15, 15 is a prelim. It means that you must know to be able to do those other areas effectively. Do you understand? Because even in tax administration, when they give you information, it's somebody's corporate tax liability that you are going to adjust, or somebody's VAT, right? Withholding taxes, yes, they can tell you calculate the withholding tax from a VAT computation. So you just take the gross amount, assuming they gave you tax inclusive figure, then you gross it up and get what? The withholding amount on it. Okay, so we are going to look at all that. Then for the very first time, they've introduced some things which are very new, which is 15 marks, right? You have IT in taxation and we have ethics in taxation. This is a very new area. But now what I want you to write in your books is your focus area, right? That yes, we'll do everything, but I want you to build your strength on this 15, 15, 15. Is that okay? Are you writing it down? So write my strength areas or areas I need to build my strength in. So write it down and put the syllabus weight in there. Areas I need to build my strength in. Write it down. Let me get some water. I believe by then you would have been done. Peter, are we done? Are we done?
Yes, please.
All right. So now we look at a breakdown of the syllabus deeply, right? Now, before we look at the breakdown, I want somebody to read this side for me, ethics. I need a dedicated reader. What does it say?
Recognition.
Okay.
Should I go ahead?
Yes, please.
Oh, you can go ahead.
Ethics. Recognition of the importance of ethics is fundamental to professional accountants working in the area of taxation. Students are required to identify the objectives of taxation, ethical principles, along with threats and safeguards, as well as issues such as conflicts of interest, money laundering, tax avoidance, tax evasion. Ethics may appear as a feature of any question.
Can you repeat that for me again?
Recognition of the importance of ethics
No,
is
the
fundamental.
last
The
sentence.
last one. Okay. Ethics may appear as a feature of any question.
You get it. So it means
Yeah.
that now, any question you are solving, they can bring an ethical scenario. Let me give you a typical one, right? You are computing the tax liability of a company, right? They give you all the details. Then the A part says that compute the tax liability of AB Limited. The B part says, based on the information above, GRA had recognized that the revenue had been overstated or understated by the trainee accountant who was employed by his uncle, who is the current manager. Identify any ethical and professional issues. You see, so you get the tax, but the B part of the question can be an ethical scenario from the one you have been given. Does it make sense?
Yes. Yes.
Are you getting the style?
Yes, sir.
All right. So as we are here, right? Anyone we see, please, we'll be learning. Though we are going through the syllabus, there are some things that we will be learning. Okay. So let's go through. Reference 8.
Okay. So should I read?
Yes, please.
Describe the Ghanaian tax system and fiscal policy. Describe the key principles of and the bodies with responsibility for the Ghanaian tax system, including the overall role and purpose of taxation in a modern economy, classification of taxes, including kinds and types of taxes, principal source of tax law and practice in Ghana, the basic taxpayers' rights and obligations, establishment and the governance structure of Ghana Revenue Authority, the structure of the tax system in Ghana, progressive, proportional, and regressive. Then explain the impact of government and central bank fiscal and monetary policies with particular attention to the following: monetary policy, fiscal policy, types of fiscal policy, national and public debts and their implication on the national economy, government grants and intergovernmental transfers in relation to local governments.
All for how many marks?
All for 10 marks.
This is the biggest material sweeper. Okay. All for 10 marks.
Yeah.
So I'm telling you that exam is a strategy, right? Yes. How can you cram all these things inside your head? You must do dialogue. What did I say?
Dialogue.
So it's a secret people do not know. In all my years of teaching, I realized that anytime something is like list, explain, state, discuss, that is why questions like this is discursive questions or scenario based. You guys have to really, share ideas, talk on it. You get a point, you all share ideas. Do you understand? That's the way it sticks. If you realize, anytime you have conversations with people, they tend to stick, right? So that is the strategy. But if you learn it on your own, you will definitely forget. You remember bits and pieces, right?
Yes.
So I'll be teaching you exam techniques. My team will also be teaching you exam techniques, right? Some of these things you can do summary. Now that there's AI, I mean, you can be using it. People don't even know how to use AI. Maybe I'll do a session and teach you prompt engineering. But the whole thing is that these things are theory. And once they are theory, I'm happy. Do you know why I like theory? Because it's one area that you can easily express yourself, right? If you have a point, you can explain it in your own words and get the marks that you are supposed to get. Do you get me? So that's why I'm happy with theory. And now the tax, even financial reporting has become more theoretical. I'm happy. Because usually when it comes to calculation, sometimes it's subjective, right? You see a figure, you don't even know how to treat it. But this one, if you know, you know. If you don't know,
You don't.
you don't know. So it's better you know, right? Then you make your
Yeah.
And this area is something that if it is 10, you can get 10 over 10. For me, my ideal student is somebody who can go into the exam hall and at least blast 90%. And it is possible. I've done this myself over. I never failed any paper in my professional exams, right? So you can also do it. And that's the same structure I use to tutor. And my team also uses, right? We are there for you no matter what you need. But then with these theory areas, you'll be doing more of discussions. That's why the group discussions are necessary. Are we okay? So today, this is the area we'll be looking at. It's very broad, but I believe we would at least talk about these ones, right? We'll talk about these ones when we finish looking at the overall syllabus. And then a bit of monetary fiscal policy, the types of fiscal policy and all that. Administration, I think next week they will be taking you through that one, right? But for me, this is my role today. And then I would take you through ethics and then IT, right? Those are new areas. What is it? The importance of ethics in tax practice. We'll look at it. And then we'll look at how IT has influenced taxation, okay? So these areas are more of discursive areas. And once I finish with you, that is not the end. I'll be using the principles of taxation textbook Though I'm not done, but we'll be using it to go through this area. So you see how the textbook looks like. Is that okay? I hope that is fine by you. So we have seen the things we have to know. Now the B part says what? We should explain the administration of taxes in Ghana. Tax administration, as part of every tax paper that you write in Ghana, you are going to see tax administration because tax includes three mechanisms: policy, law, and administration. Okay, so policy is set, then the law is what we are learning, then administration is where they administer, I get it, and take money from people. So the reason why you guys are learning tax as students is because of 4 rules. Okay, so as a practitioner, you have 4 rules that you need to play. So it's either you are working directly with GRA or you are working on your own. So the first rule a practitioner has is to identify taxpayer, so identification of taxpayers. 2 is assessment for tax, right? Assessment. And 3rd is collection of the tax, okay? And then payment into the consolidated fund. Now, the whole thing is, as a practitioner, you are either working here and here. But here, unless you are working with GRA, right? And payment into the consolidated fund, unless you are working with GRA. So why we work as tax practitioners is so that we can identify taxpayers and assess them for tax. Or most of the time, most of you, I don't think you work in the identification range. You'll be working under assessment. Assessment is just determination of tax liabilities, right? So anytime you go somewhere, somebody says assessment, it means that you are determining what? Tax liability. Does that make sense?
Yeah.
Okay. Now, I told you there are 4 rules. Even GRA has these same 4 rules. Identify you, assess you for tax, right? Collect your taxes and pay. Now, as a taxpayer, you also have some rules. You have some rules you need to play. First, you need to register with the authority, right? You need to what? File your taxes. Through filing, you need to declare the right information, right? And you need to what? Pay your taxes. Do you understand? So we are saying that yes, you have these rules, and we as practitioners also have these rules. Do you understand? So anytime something goes wrong with respect to these things we are seeing, then we call it a taxpayer risk. What did I say? Anytime something goes wrong with this, we call it what?
Taxpayer risk.
Yeah, so you were supposed to register with GRA. You failed to register. That is a registration risk. Or maybe you didn't make 200,000, right? 200,000 is the threshold for registering for VAT. You didn't meet 200,000, but maybe you had bad record keeping, right? And because of that, they registered you for VAT. What kind of risk is that? You have been wrongly registered for VAT. What kind of risk is that? It's still registration risk.
Registration risk, yeah.
You understand? If somebody files on the wrong date, files his taxes on the wrong date, or do not file at all, what kind of risk would that be?
Now the filing risk.
Filing risk. Thank you. What if somebody underdeclares revenue? What kind of risk would that be?
Declaration
Risk. Thank you.
risk.
If you do not pay your taxes at the right time, or you don't pay at all by evading, what kind of risk would that be? A payment risk.
Payment risk.
So you see, practitioners have their role, and taxpayers also have their role. Do you understand? So each of them have a role to play. And I told you that taxpayers, what is their role? RSDP, right?
Yeah,
Register,
to
file,
register, file,
declare.
declare, and pay.
And these people have IACP, right? They identify, assess, collect, and pay. You get it? So this is a little you have to know about administration. I told you administration has what? Tax has 3 what? 3 factors you always consider.
Yes,
That is policy,
policy,
law,
law, and
and
administration.
administration, right? So every tax system, these are the components of every tax system, right? So these are all theories I'm giving you. They can ask you, what is the component of every tax system? Every tax system has policy, every tax system has law, and every tax system has what? Administration.
Administration.
This is something we call tax sovereignty. Tax sovereignty is the ability of every country or every nation to be able to make their own laws, that is policy, to be able to what? Collect money, administer and collect money. Okay, so my ability to make laws falls under tax policy. The ability to collect money, I get it, or administer taxes is administration. Okay, and then your ability to collect money is also there. So we are saying that there are three types of sovereignty, which includes first is what? Your legal sovereignty, right? Are you a sovereign state? Yes. Can you make laws? Yes, I can make laws, right? 2, can I administer those laws? Remember, if you make laws, there are some people who must implement the laws. True or false?
Yes.
Yes. So we have administration, what? Or administrative sovereignty, right?
Mm.
And the last is what? Revenue sovereignty. Okay, after I administer, why am I administering it? I must be able to take money. True or false? Now,
True.
this is the reason why there are a lot of conflict among people's tax systems. Because the way somebody will create a law and administer the taxes and take money is different from how Nigeria will do it. It's different from how Ghana will do it. It's different from how US will do it, right? So sometimes it can create a lot of differences in people's tax system, right? So it can create something we even call double taxation. That one is a topic we look at another time, right? But then these are some of the things that you will mostly see. Is that okay? So
Yes, sir.
I hope you have written some small things down. These are basic theories that I mean you should keep on your toolkit just in case you get somewhere and they are talking about taxes. You know what to talk about.
Yeah.
That is okay. So what are the basic things we looked at here by talking about administration? We looked at the role of GRA and the practitioners, which is IASCP, right? They must be able to identify the taxpayer, assess him for tax, collect the taxes, and pay into the consolidated fund, NOSU. And I told you assessment means what? Determining tax liabilities. Do you remember? Then we came to talk about the role of the taxpayer and how taxpayer risk can occur, right? The taxpayer has to be able to register, file, declare the right information, and pay taxes. So anytime that thing goes wrong, what do we call it?
Risk. Taxpayer risk.
Okay. Then we came to look at what? The components of every tax system. We said every tax system is made up of policy, which
Policy law.
are decided and made, then the law itself, which is now made, and the administration, right? Which is how we administer or put them into implementation and collect money. And this thing is the principle of what? Being a sovereign nation. And every sovereign nation has 3 rules, right? The ability to make their laws, the ability to administer those laws, and collect money, right? So the ability to create your own laws is called
the legal
sovereignty. The ability
sovereignty,
to implement those laws are called,
the administration sovereignty.
and the ability to collect money, that is
Is a revenue.
Revenue
sovereignty.
sovereignty.
I hope that is okay. I hope it was well understood. That is good.
Yes, sir.
So now that we have seen the elements or the components of every tax system, the next thing is to now look at the administration of the tax system, right? Which includes the system for assessment and the preparation of returns. Now, you remember I told you that we must declare information to the authority. That information is put on a tax return. A tax return is not just the return form, but includes any additional information that the tax authority might require from you. So any other information like your audited financial statement, your underlying records, some other information, your day books and whatever they can ask you to add is a return, right? And there are various kinds of return, reasons why we prepare returns, why even the Constitution of Ghana requires people to prepare returns, right? So once you send the return, they will use that return as a basis for giving you an assessment. On your return is your assessment actually because you have computed your tax and put it on your return. But then for a normal taxpayer, the authority also has the mandate or the power to use your return to generate a tax liability, okay, based on what we call the commissioner's assessment. So the commissioner himself can say, this guy works in the manufacturing industry. All the manufacturing companies I see in Accra, roughly they are making income of 240,000. So they should pay tax of roughly, let's say, 5,000 cedis. Do you understand? Now, that is the commissioner's best judgment assessment, okay? So in actual sense, there are 2 main types of assessment that we have in the country. And I told you assessment is what? the process of determining someone's liability. Do you understand? Your tax liability. So we can determine your tax liability in two ways. One, either by you yourself, you the person. We call it self-assessment. And self-assessment is where you compute your own taxes. I get it. And two, that is what we also call voluntary compliance, because you decided to compute your own taxes without nobody forcing you. Do you understand? And the second one is what we call government or administrative assessment. That means that it is GRA who will now compute the tax on your behalf. Do you understand? So yes, you can submit self-assessment and still GRA will compute tax for you, because maybe the commissioner may have rejected the assessment you sent. Are we okay? So I told you there are two main types of assessment. What are they? Self-assessment and what? Government or
administrative
Mental.
assessment.
so in class, you guys will go through the different types of assessment and the different types of returns. Now, the next thing is, as you have been able to prepare returns, you must know when to submit those returns, right? And as they've raised assessments on you, sometimes you may have overpaid tax, right?
Yes.
You should be able to get refunds. You must know the different kinds of tax, including taxes that are on account, meaning taxes you can get credits for. I get all these things, you have to know them. Okay, so the time limits, there are various time limits, and the thing about time limits in Ghana is that they are all similar.
Yeah.
All withholding taxes are filed on the 15th. It doesn't matter the type. So payee, normal withholding taxes, even the ones on gifts, they are similar ones, right? That all paid 15th on or before the 15th of the following month, right? VAT and its corresponding levies are on the last working day of the month, right? And then we have all year-end taxes, like corporate taxes, your year-end ones are paid 4 months after the year end. So the day we submit taxes are the days we pay taxes. They are the same. So if they ask you for filing dates and payment dates, they are just the same. But sometimes you can file for extension to pay at a later date. Do you understand? Okay. Now we'll learn the time to file, pay and claim refunds and setup. So refunds and setup are very important. This one, I'll say that this is a bit of tax planning people usually ignore, right? So if you know this, I think even from the low level, you can help people to know when to file, when to pay and claim their taxes, right? Sometimes the commissioner can set up a liability against another income. Maybe if you had a tax credit from here and then a tax liability here, the commissioner himself may allow you to set them off, right? Then we have registration and identification of taxpayers. Mostly we use at your level, you don't go too deep. You just know what the taxpayer identification number, what it is. And now because IT is part, now you know you can get an ETIN, also merge with your Ghana card and what an ETCC, right? So these are new concepts that as a student you should know and know well. Is that okay? Now, then we come and look at procedures relating to compliance checks, dispute resolutions, objections, and appeal procedures. So what happens here is that when it comes to compliance checks, we are just talking about audits, right? The law, this new law has mandated, or it has given the GRA the power of audit, right? Under Section 36 of the Revenue Administration Act. And this says that the Commissioner General has the power to audit you based on some factors, right? And before they audit you, there's a section that says what? They must be able to provide a notice to you to tell you that, oh, this is it. We have sent you a notice. We want to audit you, because an audit intrudes on the affairs of the taxpayer. So definitely there must be a law that provides you a note or a letter. Mostly this letter that the law mandates the commissioner to send, we call it an introductory letter, right? It is sent by the tax auditors to you saying that, hi, maybe AB Limited. Our names are John and Margaret, and we are coming from GRA to audit you. Please tell us the time you will be free, right? Or we have scheduled these dates, and these are the things we want to come and audit you on, right? So in actual sense, tax audits take two main approaches. I believe this is just a prelim, right? It takes two main approaches, and these two main approaches are either what we call a planned approach, right? Or an emergency approach. What does this mean? It means that if they want to do audit, assuming they send you this notice, it means that it is a planned audit. With a planned audit, we inform the taxpayer before we come and audit him. With an emergency audit, we don't inform him. Why? Because maybe we've heard of an issue of fraud, right? Money laundering. maybe third-party intelligence information, or the person wants to abscond or leave the country, right? This is where mostly we do an emergency audit. So how many approaches do we use for a tax audit?
Two.
Two.
Planned
Two
approach
approaches.
and emergency approach.
So can you explain the difference? What is the difference between the two?
With a planned approach, it means that the person is informed before the audit is taking place.
And how is he
And with
informed?
the image,
And how is he informed?
but notice,
Notice. Okay.
written, yeah.
Or
And then with the images. Hello, sir. Please, can you hear me?
Yeah, I can.
Your line was breaking. And then with the emergency approach, it means that they do not inform the person before the audit is taking place.
Why?
And they think maybe the transaction, like as in there's a fraudulent transaction or any other related issue.
Yeah. So mostly a fraudulent activity or an emergency audit takes the form of an investigation, right? We call it an investigation or what we call a back duty. Okay, so anytime you go, I'm giving you some terms. When you hear something like a back duty means it explains itself by back duty, a duty behind your back. So let me give you a typical example. So this is Tom, right? Tom operates a small hardware shop where he sells computers, right? And Tom says he makes 20,000 is too big, right? Tom says he makes 5,000 cedis monthly, let's say. Okay. Now let's look at Tom's properties. Tom has a 10-bedroom apartment, okay, duplex, 2-building type in East Legon. He operates a small hardware store. Tom's wife owns the biggest shop at Makola. Tom has 4 Range Rovers and then 3 V8s. Now, this is a high net worth individual, right? This hardware store, can you all agree with me that it does not really, you can't be earning this much and be having this? Or what do you guys think? Is Tom hiding something?
Yes. Yes, there's something fishy there.
There's something fishy, right? So the GRE can do what we call a back duty.
The back
Do you think this person, we should inform him before auditing?
No,
No.
no,
No.
Why?
because there's an investigative audit.
Yeah, Tom, they live the life. Oh. Charlie, the guy, they live the life. How you gonna do it? So,
Where else people go outside?
yes, there might be something fishy going on, right? It could be money laundering, it could be fraud, it could be non-compliance, maybe he's even lying to people, right? The source of his funds may not be real. So this is now the other aspects that they've included in your syllabus. And I like these things because when we are discussing, it's fun. It is for time pass. A lot of time will pass and we'll not even feel it. I like this scenario. So let's put tax aside, right? As an individual yourself, what can you say about Tom? What do you think may have been the source of his proceeds?
Yeah, probably money laundering.
Probably money laundering. Okay. But it could be that he's also doing legit business, but he's not disclosing to
Yeah.
What
Yes, not disclosure.
Yes. It means that maybe he's just not being compliant, or even this hardware store, it could mean that he's doing it and making more money, but he's not just showing anyone. So it doesn't mean that anytime you see somebody having so much, okay, what if it was also an inheritance?
That one too is there.
That one too is there. Yes, give me another scenario. Yes, let's keep it rolling. What other things can we say?
It could be a merger too.
You said,
A merger.
okay. So he merged with somebody.
Yes.
Okay, and he's
So
having.
what if it's a gift?
Okay, I like that. I like the way you guys are thinking. These are some of the things we want to see. Yes, it could be probably a gift from someone. Okay.
I think his main reason of not disclosing is also to evade tax.
Okay.
That's his main reason for not disclosing.
Nice. Tax evasion. Okay. Okay, what if his wife's family are rich and then it is his wife's property and then he's using it, but he's just a nice old man in a small corner shop making 5,000 a month. That is also possible, right? So you can think about all the possibilities in a scenario and talk about them. But then when you're talking about some of these things, yes, inheritance, still there are some taxes that gift, yes, because it's not from immediate family, there could be some taxes there, right? So you see how we are coming up with issues, but still tax keeps cropping up. Have you identified this? So now when they give you scenarios, I want you to think far and wide, right, about why this could be happening. If you have that, that is what we call professional skepticism. And it's now part of every paper under ICA, okay? And you guys are in safe hands. Actually, that is what I do. I'm an investigator. So some of these things we open far and wide, okay? Let me give you a typical scenario. There was this guy who had, let's say it's not up to this, right? But he runs a gym. And the gym has 1,000 members, right? And the very big gym at Accra. And each person pays, let's use 50 members, right? Each person pays 1,000 CD subscription every month. So how much do we make in a year? That's the standard.
So that's 50,000 a month.
Saying a year. So 50,000 a month times month. That means how much?
That's 600.
600.
So this guy is expected to make 600,000 annually, which is not bad for a business, right? Now, this guy has this kind of properties, right? A lot of them. And from investigation, he's saying that he works with the big dogs. When I say big dogs, you understand?
Yeah.
Yes, he works with the big dogs. So some of the properties, they gave it to him for free. So he's working with ministers. And his gym is a very big gym. I just don't want to mention the name. It's almost all the big shots. That's where they go. And the funny thing is that the gym doesn't really look like a gym. Instead of seeing people training, you see people drinking smoothies and, having a chat and doing business. I like the way he does his things. You go there, you don't even see people training. You go there to have chat. So he has a lot of properties because he meets a lot of big people. Now, for GRA, they don't care. But the whole thing is that, okay, first, tell us the source of your wealth. And two, if that wealth has some taxes, you need to pay. Do you get it? Does that make sense? So, yes, the source of your wealth, you can identify this by doing what? I gave you a term. What do we call it? We do what? A tax investigation, or what's another name for a tax investigation?
Tax assessment.
Back duty.
Back duty.
Back duty.
Back duty.
We call it the back duty. You better with chief, right? And we do a duty behind you. We can go and make inquiries to your wife, investigate her shop, ask her. Maybe we will not come as if you are officers, but maybe roughly, right? So that she will not be scared. Are we okay? So that was a little bit about it. So audit. Then sometimes when we audit you and raise an assessment on you, right? If you don't like the assessment, you can raise objections. And that is what we will also be learning. You learn dispute resolutions. Assuming you don't like what they did, you can file an objection. And then in Ghana, it's not fair, but anytime you raise an objection, you have to pay 30%. If it has to do with direct taxes, you pay 30% of the tax you are objecting before they listen to your case. And if it is indirect taxes, you have to pay 100% of the tax before they listen to your case. Do you think it's fair? I feel I've not been treated right. Then you are telling me that you put 30% down payment before they listen to my case. What if I don't have money? That means it's a case. That's how it works. Okay. Then if the objection doesn't work, you go for appeals. This is where the court case actually happens. And now they've introduced what we call the Independent Tax Appeals Board, the ITA. You must know the role of this board because now they'll be asking you. Do you understand? Then apart from that, sometimes your money, you see, when your money is with GRA, it takes a lot of time to get a refund. But when GRA's money is on you, they can even close down your business. So we must learn how to recover tax liabilities, right? And if the person does not pay tax on time, we must learn various offenses. We must learn penalties and interest for non-compliance. And the common interest and penalties that you are going to get most of the time for your exam is one, failing to pay tax, right? There's a common one. Interest for underestimation of tax payable. Okay. Then failing to file returns or not filing on the due date. These are the common ones that they are always going to ask you, right? There are other penalties, but these are the ones that the calculation can be a little complex. For instance, if you file to fail returns, you pay 500 cedis if it's every return. plus every day that you do not file, you pay 10 cedis. So if somebody, let's do this calculation. If somebody was supposed to file withholding tax for March, right? And he ended up filing it in December, let's calculate the penalty. So if he's supposed to file it in for March, that means he would have filed it in 15th of what? April, true or false? Because it's 15th of the following month. So from 15th of the
True.
following month down to December, you pay 500 cedis plus how many days? Let's count.
May, June, July,
So
August.
May, June, July. So we can write the days here.
May,
Start with the
June,
time. So May is how
July,
many days? 31.
August,
June, 30.
September, November,
July,
December.
31. August, 31. September, 30. October, 31. November, 31. 30. December, 31, right? Then we have 15
Yeah.
days. 16 days in April. No, so we
Okay.
can count them. We have 1, 2, 3, 4, 5, 6, 7, 8. 3 8s. That's about
24.
24. Yeah, so 240 days. Plus we have 1, 2, 3, 4, 5. So 245 days plus 16, right? So we can get the number of days. So add for me. You see how these things are fun. Tax is fun actually. So how many days do you get?
261.
261. So we have 261 days, all by 10 cedis each, right? Plus the 500 cedis that we have here. So how much is you supposed to pay? Yeah, see, your hand is up.
Hello, sir.
Yes, please.
Yeah, please. I'm a bit lost. Please, the 16 that you wrote there, what is it, please?
Oh, you know that we have 15th April, from 15th April. So I started counting from 16th of April to the end of April. So 16 days.
Oh, okay. Okay, please. Thank you.
Are you okay now?
So 110.
Yes, please.
3110.
3,110. Okay, so this is the
Thank
total
you.
penalty this guy has to pay. You understand? Okay, so that's failure to file taxes. But there's a special one, which is CIT, Communication Service Tax, CST, sorry. Now, CST, that one, you end up paying 2,500 cedis. And then for each day of delay, you pay 500. So if it was CST, then this guy will pay this 25 plus 261 times 500 cedis. Very huge, right? So these are some of the penalties we'll learn how to compute. Then if it has to do with interest, mostly it will be compounded monthly at the statutory rate. So that's where you use the time value of money, right? To say the future value is what? The tax, which is the tax you have to pay, being the principal times 1 plus R raised to the power n, right? So this principle is learned in finance. We are going to learn how to apply it to compute interest. Okay, so it will be a very fun ride. I hope that is okay. Now, the same things, they can send you to courts to recover taxes, interest, and penalties. You must know how to deal with proceedings. Then you come and learn official language and currency. The official language in Ghana is what? English. And the official currency is what?
Ghana cedis.
Ghana cedis. This one, even if you haven't read it, you can answer. But you know what is peculiar about this? Not just knowing that. What if a document is in another language? That is where you have to what?
Do
Convert it
translation.
and at your own cost, right? If a currency is in Ghana cedis, you have to convert it using the Bank of Ghana rate, right? But there are only different circumstances where a currency can still be in a foreign currency. When there are petroleum and mineral arrangements or agreements. For those ones, we applied the prevailing rate and the prevailing revenue as it is, right? So those ones, if it's not in English, it will be in the currency that that petroleum agreement has. But
Was
beyond the scope of your syllabus, because at ICA level 2, you do not do petroleum, right? Then we have to look at the nature of forms, documents, and notices used in the tax system. Like when do we serve notices to somebody? Sometimes they send it to your office, they send it to your rep, or if it is posted to you, or if there's a signature, it is treated as being sent to you, right? Okay. Then we look at tax refund and the general refund account. So tax refunds, there are a lot of them, but there's a GRA general refund account. Now, this account is set up or set aside by GRA to settle what? Payments under the law and refunds, right? So you should know what they are used for. So this area is a broad area, and all for how many marks?
10 marks.
10 marks, but very huge material. So we have 20 stemming from this, and they can combine them as one question. Okay, so we come to the big areas. 15, right? Now, when it comes here, you must know the basic principle about taxes for individuals and partnerships. Now, the scope of income tax, what is income tax about? Income tax is just taxes which are levied on what incomes directly, right? This is a tax for the impact and the incidence is on the same person. We'll come and look at impact and incidence of taxes. But just as a simple rule, when we say impact of tax, right, it means that who pays the tax for the first time. Okay, so if we are saying impact of tax, we mean that, let's say if I've imported Ghana, right, I am the importer. Okay, I will now sell to, let's say, a customer, right, or a wholesaler. Then the wholesaler can sell to a retailer. Then the retailer can sell to what? A customer, right? Now, if I import goods into Ghana, where is the impact on the tax? The impact is the first responsibility to pay the tax. Who has the first responsibility to pay the tax? Who here?
The importer.
The importer. Meaning that the impact is on another person. But who pays the last tax? I mean, when this guy pays, this guy will include it, this guy will include it, then finally it's shifted to the customer, right? So the customer pays the last tax. We call that the incidence of tax. You understand? So this kind of tax, it means that that is what? An indirect tax. Indirect taxes are taxes where the impact lies on a different person and the incidence also lies on a different person. Do you understand? Because this one, assuming we paid custom duties, we pay VAT, right? That VAT will be transferred to this guy, will be transferred to this guy, and will be transferred to the customer who bears the last tax. So that one is what? Incidence. And impact is the first responsibility, right? So that's an indirect tax. Now let's look at your payee you receive you pay at the office. Who bears the first responsibility of paying your tax at the office? Is it not you?
Yes.
Who bears the last responsibility? It's still not you.
Right. It's still me.
Still you. So direct taxes are taxes where the impact and the incidence are on the same people. So you get a difference. This is the better fiscal definition of direct and indirect taxes. Now it makes sense, right? So this one is the same person. So the tax that you are paying at your office or the tax on your business profit, who bears the first responsibility? It is you. Can you transfer anyone?
No.
No.
No. It means that the impact and the incidence is on the same person. Okay. Does that make sense? So income tax is what we call direct taxes. What is direct tax? It is a tax whereby
the impact and the incidence resides on one person.
On the same person, right? And when you hear person in tax, it means either an individual or an entity, right? So anytime you hear person in tax, it means individual or what? An entity. An entity can be what? A partnership. It can be a company. It can be a trust. Or it can be what we call a permanent establishment. Okay. So you see how taxes, it is very interesting. So we are saying that anytime you are dealing with direct taxes, you are looking at what? The impact and incidence of the same person. If you are looking at indirect taxes, then the impact and incidence is on what?
On different persons.
On different persons, right? And the ability to move that VAT to the wholesaler, to the retailer, to the customer is what we call tax shiftability. What did I say? It's called what?
Tax shiftability.
So your ability to shift taxes between people. Okay. And we have what we call forward shifting and backward shifting. The shifting we are seeing here, is it forward or is backward?
Forward.
Forward, yes, because we keep shifting it to the last customer, right? So to shift from impact to what? Incident, you need tax shiftability. And this is a forward shiftability. What about the backward shiftability? A typical example is where we have a trotro, right? We have a trotro going, right? And we realize that the trotro, you see the trotro, if we know that the fixed fee from where you are going to here is 5 cedis. So this trotro has incurred money for repairs, maintenance, what? Can it shift it to the customers?
No.
No, because we know the price is 5 cedi. True or false? So we can only shift the extra cost on the trotro mate and the driver, because we cannot pay more than 5 cedis because
Mm,
the industry is saturated and we can easily get another trotro. What do you think?
mm,
You go
mm.
a trip that you're supposed Ghana, they are very trotro conscious. Even make a 5 cedi 20%, they will pick another car. Meanwhile, this
Mm.
would have saved you time. Yes, that is an example of backward shifting, right? We
Mhm.
shift the incidence back to those who gave it to us. Do you understand? Because the customer is willing to pay extra. So you
But
have
so it doesn't relate like that too.
yes, but that is how
When-
it, at least it should be reasonable. You know that
Okay.
okay, from here to here, they take 50 cedis for delivery. So
Mm.
roughly, if you're around 55 thereabout, it's not bad. But somebody
Mm.
charging 70 is so bad, right?
Mm.
About the cost, yes, you will get another person. So that's an example of tax shiftability.
Or backward shift. Okay.
So backward shifting, we shift it back to you. You cannot shift it to us, right? So it's like
Mm.
if a retailer is selling something to you at
Okay.
70 cedis, but you know that everybody else is selling it for 20.
It's for
It's too
50.
much. So we have to shift it back to you so that you'll be forced to sell it at the 20. So that's back.
Yeah. Backward shifting. Okay.
Hey, you are learning so many things, eh?
Yes.
Okay. All right. This is just syllabus walkthrough by you see we are learning. So we have seen the scope of income tax. We have learned some new terms. What are they? What is impact of taxation?
Impact is the one who bears the immediate
Responsibility.
responsibility of the tax.
Okay. What is incidence?
Incidence is the one who finally suffers the burden.
Okay.
Yeah.
So how can impact change to become incidence?
Through backward shifting.
Through tax shiftability. And how
Tax
many
shift.
types of tax shiftability do we have?
Two.
2 times.
And can you explain and give examples?
Yes, sir. So we have the forward shifting and the backward shifting.
Okay. Example of forward shifting.
Forward shifting is purchase price of an item where the costs of producing or manufacturing a product is shifted to the onward consumers or the final consumers.
And backward shifting.
Backward shifting is when the incidence is suffered by the initiator, the one who initiates the transaction.
Okay, I'll take it. So distinguish between direct and indirect taxes.
Hey, say direct and indirect tax. Okay.
Direct tax.
Direct tax is when the impact
Sir,
and
so
incidence.
Okay, so only
all
one-
fall on one person.
okay, direct tax,
Okay.
the impact and the incidence falls on one person, right?
One person.
Indirect tax.
Yes, sir. Then the indirect, it's shared. Where the impact sits with one person, it is and the incident is
With another-
suffered by another person.
That is true. It means that everything I said, you understand. Okay. So my next question is, how many types of revenue sovereignty do we have? I mean, we are quizzing. Let me see if you remember.
Three.
Three.
We have 3.
Um,
We have the
We have the
legal
legal sovereignty,
sovereignty,
sovereignty.
and the
the administration sovereignty, and the revenue
the
sovereignty.
revenue.
what is revenue sovereignty?
The revenue sovereignty is when you have the ability and the capability
ability to collect tax
generate your own, collect your own tax
Okay.
as a country.
or mobilize.
Okay. So what is declaration risk?
Declaration risk is when you fail to declare your
Okay.
tax
Or under declaration, right?
or under declare your tax.
Okay. My next question is, how many approaches can we use for a tax audit?
Two.
2.
2.
What are they?
Back duty and then plan.
approach and
Plan and unplanned.
Plan and
an
non-plan.
emergency approach.
Yes, that is true. Another,
Plan and emergency.
Yes, plan and
Yes,
emergency.
Yes.
Yes.
Another way we call the emergency approach is
Bad
Budget,
duty
bad duty,
tax investigation, right?
or
or
tax
tax
investigation.
During a planned audit, we send something to the taxpayer auditing him. What do we call it?
Introductory letter,
Or an audit notice. Thank you.
audit notice. Yeah.
You guys have done well. That's nice. So the next thing we have to know, the next thing we have to look and focus on is the concept of residents and non-residents. Because we said that tax involves persons, and I told you a person can either be what? An individual or what?
Individual
Or an
co-
entity.
an entity,
And an entity can be either a partnership, a company, a
Mm.
trust,
a trust,
a permanent establishment.
permanent establishment.
So in simple terms, what is a permanent establishment? A permanent establishment is a business's home away from home. What did I say?
a business's home away from home.
Yes. So if I'm a Ghanaian, right, and I have a branch in South Africa, it is my home away from Ghana, right? So we call it a
Yeah.
permanent establishment. It means that a Ghanaian cannot have a permanent establishment in Ghana. Do you understand? A permanent establishment can only be owned by external people. That's why we said permanent establishment. You have established yourself permanently in someone else's country. Makes sense, right?
Yeah.
And the rules is that every permanent establishment,
Mr. Can you come again on that?
I said you have established yourself permanently in someone else's country.
Mm.
So you have physical presence in that country, but you have not registered as a company. Still, the law should recognize you because you are carrying out economic activity. Does that make sense now?
Mm. Yeah.
Are you okay? Are you okay now?
Yes, sir. I didn't get the first one. You said the
I said
home
a
away from home.
business's
or something.
home. Business's home away from home. So your home away from your home is permanent establishment. Yes. You see how easy tax is? Tax is very easy, actually. You just need to know the right principles and then you should be fine. Now, when it comes to residence, as I told you, the same way you can have what? A resident, what? Individual, right? We'll look at it.
Yes.
A resident individual is simply a Ghanaian, right? So in Ghana,
Yeah.
if you're Ghanaian, automatically you're a resident individual. But if you're Ghanaian, there are two criteria. Either, so listen, the rule is that if you're Ghanaian and you stay in another country for more than 1 year, you are no longer resident. Residence is assessed every year. What did I say?
Assessed every year.
Every year. So it means that you may be resident in 2023, but you might not be resident in 2024.
Oh, okay.
So residence is assessed every single year, everywhere in the world. So I may be resident in Ghana 2024, or even resident for part of the year this year, but next year, I may be resident in another country. So the whole rule is that if you're a Ghanaian, when do you no longer become resident? When you stay in another country for more than what?
180 days.
No, 365 days.
Sorry,
365 days.
365 days.
If you're
Okay.
a Ghanaian, if you're a citizen. So instead of citizen, let me use the word citizen. Instead of Ghanaian, let me use the word citizen, right? So if you're a
Okay.
citizen of Ghana, don't stay elsewhere for more than 365 days.
365 days. Okay.
Okay? So it is either you have a permanent home in Ghana, or you have what? A permanent home outside Ghana.
Outside Ghana.
So if you have a permanent home in Ghana, but you do not stay here, you stay here for even 1 day, you are still resident because you didn't meet the 365. If you have a permanent home outside Ghana and you didn't stay in that home up to 365 days, you are still resident here. So the trick here is that as an individual, don't stay outside for 365. If you stay outside for more than a year, it means that you become non-resident.
Okay.
So the next one is a non-resident who has come to Ghana, right? This non-resident can only become resident when he stayed for 183 days or more in aggregate. When we say in aggregate, it means that even though before it was continuous in our old law, meaning that if I stay continuously for 6 months, but people were taking advantage of it. So one guy will come here January, February, he will travel. Then March, he will come. Then he will travel again. So that when you add it up, it's not up to 183, but now it's aggregate. So in any 1 period, the tax authority can add all the states in Ghana and choose whether you are a resident or not. But then there's a weakness. It is not everybody that we can identify unless you get attached to the tax authority. Maybe you are going for TCC or something. But then there are so many people traveling in and out of Ghana every single day. How can GRA trace those people who stay 183 days or not? Do you get it? So in effect, our country has not been fair. This is what we call the arbitrary rule or the rule of thumb, right? For residents, it is applied everywhere in the world. Some countries even use 182. The reason is because of the leap year thing. Do you understand? So we are saying that whether 182 or 183, a country that exercises strict control over its borders is the one that can implement this effectively. You understand? Because Ghana, people walk through and through. Unless you get involved, you involve yourself with the revenue authority. Let's say you are a US resident, right? You end up with a GRA, maybe you want to file returns. That is the only time GRA can tell you that, okay, we want to calculate the number of days you stay. Even some people lie. How can you catch them? That they came here. Can you call the airport? Look at the number. When will the airport get that record for you? You see, so this one is in the law, but I'm talking from an administrative point of view. Sometimes it is actually difficult to determine. Does that make sense?
Yeah.
Okay.
Yes.
Now, the last criteria for residence for individuals is what we call the special rule of residence. This one exists for government officers. Okay, so if you're a military personnel or official of government who is posted abroad during the year, you are still resident for Ghana. Because it is assumed that Ghana is the one paying your salaries. They are the one paying your emoluments. Do you understand? So the assumption is that this is a special case of residence. So if you are a Ghanaian official of government posted abroad during the year, whether you're working with an embassy, whether you are working elsewhere, so far as you are an official of government still in Ghana, you are deemed resident. Okay, so residence for individual is in 3 circumstances. So if you look at section 101, it's 4. But those 4 are broken it into 2, right? A Ghanaian who has a permanent home in Ghana and a Ghanaian who has a permanent home outside Ghana. The whole rule is that you shouldn't stay outside for more than 365, right, to be resident.
Great.
And 2, a non-resident who stays 183 or more days in aggregate in Ghana. And 3rd is official of government posted abroad, right? So those are the rules. Very simple, right? Okay. Now that is about resident individuals. Now, when it comes to resident partnerships, now let me explain something to you. You see, when you look at a partnership, if this is a partnership business, in the business, who do we have? Is it not the partners?
Yes, partners.
Okay. So in Ghana, we use the fiscal transparency rule. Okay.
Fiscal
transparency rule. Don't worry me if I'm using complex terms, I will explain everything for you. It means that in Ghana, we look through the entity to tax the partners as individuals, but not the partnership business itself. And this rule will become very important to you. So we do not tax a partnership business, but we only tax the partners. Does that make sense?
Yeah.
So that's what we call transparency. So we see the partnership business as a fiscal transparent entity. So though it is an entity, but we do not tax the company, we rather tax the individual. So we gather income for the partners. When we finish, then we share it for the individuals and tax it as though they were individuals. So this is where people get confused. When you read section 101, it says that a partnership is considered resident when one of the partners was resident or resided in the country at any point in time during that year. So it means that any of these partners, if one of them was resident in Ghana, then that partnership is considered a resident partnership. Why are we saying that? Because that individual becomes a resident individual and therefore should be taxed as a resident. Assuming Kweku was a UK person, he is not resident, so we'll tax him as such, right? But so far as one of them resided in Ghana during a principal year, then he's resident. So the law has confused people because it's a resided. The word resided means he stayed, but it's actually resident. So if it's not wrong, resided means resident, right? It's just a different form, right, of grammar. So resident, if you are looking at the word to stay, right? This is the noun, this is the verb. He resided. So he was resident during that period, then he is taxed as such. So if one of the partners was resident at any point in any year, then that partnership is deemed as a resident partnership. That's all. Makes sense. All right. The next one is a company. A company is deemed resident when one, the company was incorporated under the Companies Act of Ghana, and two, either its management or control is in Ghana. So it's two things. Either you are incorporated in Ghana or your management and control are in Ghana. So how do we talk about management and control? Some companies, okay, they are not established in Ghana, but you will see that their board meetings, their machines, everything is stored in Ghana. Have you seen it? So such companies, the law can deem them as residents and tax them as such.
Okay.
Okay. So there are other rules of resident,
Okay.
like a trust. A trust too should have been incorporated in Ghana, or somebody who is resident in Ghana directs the affairs of the trust. Either he does it alone or through other entities. Meaning that I have a trust. This is how trust works. A lot of companies intentionally use what in Ghana we don't have CFC rules, so people use trust as a way to bypass tax authorities. Okay, don't tell anybody. So what they do is that this trust will acquire another trust. The other trust will also acquire another trust who ends up buying an NGO. And then the NGO will now go and invest in a small company. And the small company will invest in another company in Mauritius. And then you do not see the nature of the entity happening, right? So in other countries, they have controlled foreign corporation rules to check this. But in Ghana, we use income splitting in place of TFC rules. That's under section 32 of the Income Tax Act. Okay, so under your syllabus, under principles of tax, you don't go deep into these things, right? Even trust, you not learn it, but at least you need to know when a trust is resident, right? Because they can ask you. So a trust is resident when it is resident in Ghana. That means when it is incorporated in Ghana. And two, a person who is what? Resident in Ghana directs the affairs of the trust. So SNIT is considered resident, right? Because it's incorporated in Ghana. And if a person who is resident in Ghana directs the affairs of SNIT, either through other people alone or jointly with other persons, right? So that is it. Because once we understand residence, we must be able to explain it in every context. Then from there, we are going to look at employment income. Employment income is broad, but when you go to section 4, it talks about all income and gains that you get from every employment, right? So we'll learn how to do that, including how to deal with casual staff, how to deal with temporary staff, how to deal with part-time staff, how to deal with bonus and overtime. We are going to learn how to deal with transfer grants. We'll learn everything there is to know. Then we learn how to do with overtime and bonuses, as I was telling you. From there, we learn business income, including income from trade, profession, vocation, income from robbery. So there was this case, this policeman, let's see if he should be arrested. A policeman was arrested, and the issue is that he takes bribe and pays tax on the bribe. He pays VAT, and then he pays, yes, he pays what do we call it? Corporate income tax on that bribe. So this guy, should he be arrested? Or because bribe is bad? Nobody does that, right? This guy takes bribe, calculates VAT on the bribe, and then calculates tax, withholding tax on the bribe, and pays to government. Should he be penalized? Or the nature that bribe is bad is bad? Because nobody does.
He should be
arrested.
he should be penalized because the basis of paying the taxes wrong. Like it's not a legal business.
But it's still a trade, right? Even tax-wise,
But
prostitution.
it's not legal.
Trade. Yeah, it's not legal, but you have to pay tax on it. Pay prostitution.
Yes.
It qualifies as a profession or trade. So
No,
Yes,
this will be
prostitution is legal. It's
looked
not,
at separately.
but prostitution is not illegal.
it's not illegal. Are you sure?
So,
No.
prostitution is illegal in Ghana. So if you are getting your income from an ethical or on illegal means, and you pay tax on it, GRA will take the tax, but appropriate authorities will come for you.
Okay. Okay. That is it. So all these things, you will learn them. Then income from investment, you have to look at the different types of investment income. But the thing about investment income in Ghana is that most of them are final withholding taxes, right? So if you are looking at income from investment, that means I must still, I get it, together with my team, teach you withholding taxes, because most of our incomes are final withholding taxes when it comes to investment. Then we learn how to treat gift taxes. So in our syllabus, okay, or in Ghana now, gift taxes are not on their own. If you have a gift regards to employment, like during your employment, let's say your boss gave you a gift, we add it to your employment income, right? During business, if you get a gift, right, from one of your clients, you add it to your business income. During investment, if you get a gift, you add it to your investment income. Or if you're an individual, you can tax it separately at 25%. That's the only case where we can tax gifts separately, right? Using a different rate. Are we okay? So that one, there's a bit of tax planning there. Are we okay? Then we learn how to quantify benefits. Now in Ghana, we quantify benefits according to market values. So we learn how to deal with different kinds of benefits in cash, benefits in kind, right? Including things like maid servants, or gatemen, security, and all that. Then we learn other individual compensations that can be given to people. Like when a company pays your loans for you, or when your company pays your light bills for you. We call those things perquisites and personal liability. What did I say? We call them what?
Requisites and then personal
Requisite and personal
Liability.
liability.
So it means that maybe your employer is paying your water bill for you, or paying your child's school fees for you. Is it not a benefit you are getting? Yes, it is, right? So these other individual compensations are what we call perquisites and personal liabilities, and we'll learn how to with all of them. Then we learn how to compute income of a sole proprietor, right? Including capital allowances. Now, capital allowances are one of the topics that people usually find difficult, but capital allowances, I will tell you the truth, is very, very easy. I'll give you a trick that capital allowances will be a sure bank. I can teach you capital allowances in 5 minutes and you'll remember it throughout your lifetime. It's not difficult at all. You must know the right tools. You must know exactly what to do at what time, and you should be fine, including what we call realization, the sale of assets. That's where the difficulties are, right? So we'll do capital allowances into detail. I uploaded a capital allowance video on my YouTube channel together with some other tax videos on employment and all that today. You can check them out, right? Very simple, one of the classes. You can check them out. Then we learn the use of exemptions and reliefs in deferring and minimizing income tax. So this is where we look at exempt income under Section 7. Okay, like income of the president is exempt from tax. Income of a cocoa farmer from cocoa exempt from tax. If we are a foreign student coming to study from Ghana, exempt from tax. Income of private universities, exempt from tax, right? And some other reliefs that we are going to learn, right? Like somebody who is into cattle farming. So we are going to learn some, what we call temporary concessions, manufacturing companies, if they are in Ghana, right? If you are located in Accra and Tema, there are some reliefs you get. If you are in Accra and Tema, you get what? A reduction in tax. Okay, you pay 25%, no reduction. If you are in a regional capital, you pay 18.75. If you are elsewhere outside the regional capital, you pay 12.5. All these things, we are going to learn them here, right? That's the use and reliefs in deferring and minimizing income taxes. Then we learn how to compute pensions. Even as part of the reliefs, we are going to learn personal reliefs, okay? We are going to learn personal reliefs for individuals, right? That is we'll look at exemptions from employment income. We're also going to look at personal reliefs like child education, marriage relief, all those reliefs, right? Social security relief, and then what we call life assurance relief, okay? So that is it. Then we learn how to compute pensions, social security fund, tier 1, tier 2, tier 3. And then we learn how to compute pensions in respect of the employer and the employee. So here you are likely to get some theory, right? Where they are going to ask you the various types of pension, what is the component of that pension scheme, and then we learn how to compute them in terms of employment income, right? So this area, very important, including partnership. So here, partnership will not be that detailed because now they shifted partnerships to part 3. So if you get partnership, it wouldn't be detailed like what you get in part 3 now. So hardly will you see partnership nowadays, right? So partnership will be very simple, maybe some theory, or even if it will come, You just compute the income and then you share for the partners, then you are done, right? So from there, this is where I'm concerned about another 15 marks. That is the taxation of single companies. So we look at the scope of company tax under section 58. We look at resident and non-resident companies. We look at the taxable profits and taxable chargeable income. We look at allowable and allowable deductions, including capital allowance. We'll do a comprehensive computation of company taxes, the use of exemptions and reliefs, the same exemptions that I talked about, like the rebate. A rebate is a discount on your tax rate, right? We will look at all that. Then we look at how to tax gifts on business. And I told you that when there's a business gift, what do? You add it to your business income. Do you remember? So these are the same things we learn here. Companies tax at your level, you do everything, but you don't deal with groups. When it comes to groups, you'll be learning things like merger and acquisitions. When it comes to group companies, associated enterprises, dividend acquisitions, but we'll still learn basics of it, right? Like closed companies and other stuff. Okay, then the next thing is to deal with realization, okay? That is selling of your assets. So when you are selling assets, you could sell depreciable assets or you could sell capital or investment assets. So we have to look at the scope of taxing capital gains under section 35. Look at the basic principles. We come and look at the gain or loss on disposal of movable property, the gain on losses or disposal of shares and securities, okay? So this one, we'll look at it under section 41, fungible assets and trading stock, where we have to use FICO. So if you buy shares, you use first in, first out to compute it. Very easy. Once you understand this, you're on top. Then we calculate the tax on gains made by individuals, where I told you they can tax it separately, right? And then we'll look at exemptions under capital gains, like things that are exempt from capital gains, like agricultural land, okay? When you buy shares in Ghana, or when you buy shares in Ghana from another business and the business retains part of it, when you use an asset that you sold, the money to go and buy another asset within 1 year or 6 months before you sold the asset, all these things are exemptions that we learn for capital gains, right? Then the next one, which is a very big area, is VAT, customs and excise, okay? So VAT is broad, but there are some areas we focus on, like what is VAT? I've uploaded VAT and VAT registration today for you. I told you, don't wait until we get there. You can learn, right? I've uploaded a video on VAT and VAT registration on the YouTube, right? Profs Training Solutions. Go there. You can watch, make notes. Don't wait until we get there. I hope that is fine. That's the best way we can make a first attempt. So we look at what VAT is about, the invoice credit system in Ghana, the VAT registration requirement, how to compute VAT liabilities. We learn this. Then the next is to look at customs entry and customs declaration, what customs is about, the methods for calculating customs, computation of customs duty. We look at duty drawback, the warehousing regime under customs. Then we must just know how to compute excise duties, right? Basic computation for excise duties. But hardly will you get a question on excise duty, okay? Mostly to be around VAT and customs in this particular die. Then we come to our good friend withholding taxes. And withholding taxes, we withhold tax before we pay to the authority, right? Before we pay to the authority later. So we'll come and look at withholding taxes. Mostly here you get a lot of questions, goods, works, and services, respect of resident and non-resident, investment returns like dividend, interest, natural resource payment, rent, royalties, and lottery winnings. Now they've added that. Then withholding tax exemptions. We'll look at how to issue tax credit certificate, obligations of withholding agents, rights and responsibility of withholdees. We're going to look at withholding VAT, then the advantages and disadvantages of withholding taxes. Don't think it doesn't have disadvantages, it does. Because sometimes withholding from you gives you cash flow problem because you do not have enough money, are you getting it, to do other stuff. Then the new area I talked about, which is how technology has influenced taxation. So we are going to look at the impact of IT on tax revenue, how the gig economy now is taking a lot of money from the system because now people are dealing online. And people dealing online means that sometimes you cannot determine which country they're operating from or where their tax revenue is. So it is distorting government revenue. And that is what we call the tax challenges of the digital economy. Then we look at the effects of technology on modern tax administration in Ghana. So now you see GRA as a platform where you go and pay taxes on, file taxes on, so the e-filing, e-invoicing, e-VAT, all these things, you will talk about them. The electronic tax account and e-invoicing, you look at it. the impact of new technologies like AI, data analytics, blockchain, automation, artificial intelligence on tax practice and administration, and the practice of tax in Ghana. And this area, you have to really look at it. It's 10 marks. Then ethics will come for 5 marks. But that 5 marks, it will be a part of every question. It doesn't mean that it will like be 5 marks on it or no. As part of your 15-mark question, 5 marks there may be ethics, or they might spread a 1 mark, 1 mark, 1 mark in every question. So ethics is now like a professional mark. Are you getting? So we must be able to recognize ethical dilemmas and suggest solutions. Very good. We'll teach you all this, how to explain the implication for taxpayers when they are non-compliant. Okay, so non-compliance, you know, taxpayers have to do some things. What are the obligations of taxpayers? Register, file, declare the right information, and what? Pay. So anytime you don't do that, it means you are non-compliant and it creates a taxpayer risk. Does it make sense? Yes. So we are going to look at the implications for non-compliance. Then we are going to what? Recognize possible instances of money laundering by taxpayers. So money laundering, what is laundry? Laundry means washing, right? Clothes laundry is washing dirty clothes clean. True or false? If my clothes are dirty, I wash dirty clothes clean. So what is money laundering? Washing dirty money clean.
Dirty money
clean.
Yeah.
So money laundering is the process of concealing the true source of illicit proceeds, right, from criminal activity. So in simple terms, you are washing dirty money clean. And money laundering goes through 3 stages. Okay, there are 3 layers or processes or 3 layers of money laundering. And these layers are 1, placement, where the thing is put into a bank account for the first time. We call it placement. You
first time
into the financial system, where it's introduced the first time. The second is what we call layering. Okay, layering is a trail of transactions, right? So you transfer from one account to the other, give to people, create a lot of things so that we cannot trace the source. Then finally, we call it integration. That's the third step. Where we integrate it into the financial system. How do we do it? Sometimes these people, mostly, they go and put it in betting companies. Okay? Or they come and build filling stations. You get it? And why do they like
real estate?
Real estate. Thank you. Why do they do this? Especially betting is the way we go because of betting arbitrage. Now, assuming I earn 2 billion Ghana cedis, right? And then I go and I use, let's say, let's use football, right? A team is playing with another team. Then I say, okay, I will bet 1 billion on this team and bet another 1 billion on this team. By all means, one team will win. True or false? I may lose 1 million, all right, but I'll still gain something from this 1 billion that I've invested.
Yes.
So if GRA comes to investigate, it was legit proceed. They have forgotten, where did you get the money to invest the betting? So what they do is that they do betting arbitrage. That's a thing for another day. I don't want to teach you money laundering, I beg you. Yes, to be able to catch a thief, you must first become a thief. And one of the jobs a lot of accountants have gone into unethically is money laundering. It pays a lot of money. I mean, helping somebody to send money and then getting a cut is no big deal, right? Anyway, so Jerry, you're getting cases like that, and that'll be interesting. So we'll learn how to exercise professional skepticism, which is being on the alert, always keeping the mind that something is wrong. I want you to always have that mindset when you're answering questions, that there's something wrong. There's something wrong. If you have that, you are not going to have a problem, right? So I believe in looking for the wrong things. If they are not there, it means the person is doing something right. But if you are looking for the right thing, then you will not find the wrong things. That's one principle I carry when I'm auditing. So I'm always looking for the wrong thing. So until I don't spot any wrong thing, it means you are right. Do you understand? So you are guilty until proven what? Innocent. Not innocent until proven guilty. I don't use that approach. It's like obey before complain. You get the idea? So for me, when I'm visiting a client, you are guilty until you are proven innocent. Do you understand? Rather than you being innocent until proven guilty, you will not spot the wrong things. It means that you are looking for his innocence. I am looking for where you are guilty. That's professional skepticism, alertness of mind. So you're always looking for the red flags. And that's how I believe every student should be in the exam. Always be looking for things that are wrong. Until all the wrong things are not found, then you believe he's doing the right thing. Okay. So when they give you some sort of data or information, you need to pass a judgment whether that thing is right or is wrong from the tax perspective, and then you should be fine. So this was a little walkthrough of the syllabus. I hope we learned something, or we didn't learn it.
Yeah,
Don't worry,
a lot.
we will learn. We didn't learn anything. So that was what I wanted us to actually look at. So let me just show you a structure of how your textbook looks like. I was trying to open it, but so I'm still on it. Be rest assured that your textbook is unlike any other. I just want to show you. No, it seems I've opened it already. Coming. So you see, that's how your textbook looks like. Okay. So it has everything that you need. You see, I'm working on it. I'm not done. You can see. It's very broad. I hope you can all see. So your detailed
Yes.
syllabus is inside with a breakdown. It gives you an assessment of everything you need to know step by step, step by step, step by step. You see everything. And you know, the thing is, you see the way the syllabus is structured. Can you see? That's exactly how your textbook is structured. The syllabus references says describe the Ghanaian tax system and fiscal policy, right? So if you go to chapter 1, you will see chapter 1, the Ghanaian tax system and fiscal policy. Describe the Ghanaian tax system and fiscal policy, all these things. Now see, it starts with the history of taxation in Ghana, right? It goes to the overall function and purpose of tax in what? The digital economy. You can see that, right? What is taxation? What all the things we talked about. Can you see? Why taxation? Elements of taxation, income tax base, the tax system, legal system, tax policy, tax laws, tax administration. Have you seen this somewhere before? We talked about it, right?
Yeah.
Components of every tax system, policy, law, administration. You can see. So you see characteristics of a good tax system. You can see all of them. Classification of taxes. Everything that you see is exactly what is here and more. Impact, incidence, and tax shiftability. Have you seen it before? Have you seen this before?
No, but you mentioned it.
You've seen it before. We saw it today. We saw it, right? And you see, I've put it here. The same examples that we talked about. You can see.
Yeah.
For example, if you have imported goods into the country, the impact is that you pay tax to the customs, right? Incidence of tax, shifting of taxes. We talked about what? Forward shifting, you can see. Backward shifting, you can see. Indirect taxes. Not so. So they are here. They are described as indirect because the impact is on the person immediately paying the tax, while the incidence may be on a different person. So everything I tell you, that is the facts, right?
Okay.
I'm spitting facts. So we look at structure of the Ghanaian system, and I make it very simple. Sources of tax laws and practice, just like the syllabus, right? You see everything that there is. Okay, you come to basic taxpayers' rights and obligations, taxpayers' right to fair treatment, right to privacy information. We come to look at what taxpayers' obligation, filing, paying, keeping records, provide information, complying with the tax laws, updating information obligation to respond to queries. And you see chapter 2 talks about monetary and fiscal policy, right? So describe the Ghanaian tax system and fiscal policy. So you see, what do you see? The monetary policy, fiscal policy, type of fiscal policy, national and public debt, government grants and intergovernmental transfers in line with what? Local government, right? You see this when you go, monetary policy begins. You can see what is it? objectives of monetary policy, tools for monetary policy, types of monetary policy, impact of monetary policy, role of the Bank of Ghana, traditional functions, modern functions, fiscal policy, types of fiscal policy, automatic stabilizers, discretionary fiscal policy. What is it? The types, contractionary fiscal policy, expansionary fiscal policy, advantages and disadvantages, instruments used in fiscal policy, the government budget. What is a balanced budget? What is a budget deficit? What is a budget surplus? All these things are there for you. Public expenditure, major items of public expenditure, the goals of public expenditure, public debt as an alternative to taxation, right? All these things are there. Then you come and look at government grants and fiscal transfers, right? Government grants and intergovernmental transfers. So you see the way the syllabus is structured. That's exactly how the book is structured, with even more information than what IC is going to give you once their book is ready. You see, chapter 3, tax admin in Ghana. Syllabus reference B, explain the administration of Ghana tax system, including system for assessment, preparation of tax returns, time limits, all these things. So GRA and the administration, you see GRA, the objective, their mission, the structure, even restructuring of the GRA office, the large taxpayer offices, area managers, all those things are there for you. Tax administration in Ghana, the elements of administration, modern tax administration, processes in tax administration, voluntary compliance. I mean, the book is very loaded. Taxpayers, their registration with the authority, identification of taxpayers, assessments, system for making assessments, right? So it's just structured in line with the syllabus, just in line. Even more than what I see will give you, very detailed. And I believe there are over 2,000 questions in the book. So it's a book, it's a big book. So, I mean, it should be fine, right? See the
Okay.
dates, first installment, 3rd month of the basis period. When are we paying this, right? Tax payable, on or before 15, on or before 15. You can see. And for now, I'm not done, so I can't give you price. I beg you. If I'm done, it has to go to the printing press first. So I'm working on it. You can see everything. You see questions, growth and sustainability levy. All these things are new taxes, right? Recovery of taxes from the taxpayer. Detailed, and I've written it in simple language for you. Recovery from third parties. I mean, recovery from agents of a non-resident. You see tax reductions and refund, the GRA refund account. You can see the general refund account. We saw all these things when we were talking, right? You see them there. Procedures relating to compliance check, disputes, and you see audit and compliance checks. GRA's powers if unsatisfied with the taxpayer. We talked about the selecting taxpayers for an audit, re-audit, notice of audit. Remember the notice, the audit notice we talked about. The types of audit, approaches for audit, powers of the GRA to conduct audits, so power to request information through the notice, serving you the notice. You remember the introductory letter. All these things are there for you. The rights and obligations of a possessor, somebody who possesses your asset. Steps to conduct a tax compliance check or tax audit. Select you, send a notification to you, initial meeting with the GRA officials and all that. I mean, it's extensive, right? I'm just going through so that you see what is in there. Handling of appeals, complaints, and what? Settlement of disputes. We saw this, right? So you learn tax review procedures, choosing the right part, tax decisions, what it is, how to file an objection. You look at all that, right? Then you get independent appeals board. You remember the independent tax appeals board. Then a large question for you, right? Which you are going to write an appeal, okay? Regarding the taxes the person has to pay, penalties and interest, okay? Including calculations. We talked about the time value of money, right? Questions under estimation of tax payable. This thing will pop up almost every date. We need to learn how to do it. Then payment failure to pay tax, right? For failing to pay tax, you see there are some questions for you to try your hands on. Then assessment of interest and penalties, the summary of all the interest and penalties, including compounding of offenses. Then proceedings, when you go to court, multiple proceedings, power of search, seizure or arrest, venue for conducting the tax proceedings, appearance in court, admissibility of documents, burden of proof, tax decisions unaffected, security not a defense, publication of name of offenders, an exemption from transaction taxes. Then we look official language and currency. You saw it in the syllabus, right? It is here. Practice notes and private rulings, forms, notices, and documents used in the tax system. We saw them, right? Just as it is in the syllabus. Now you see chapter 4, personal tax liabilities. You can see the same thing that you see. Introduction to income tax, scope of income tax, imposition of income tax base. All these things are there, right? You go, you learn tax base, all the different things. The concept of residence, we talked about it, right? Permanent establishment, we talked about it. Business and investment income. You can see it there. Income from investment.
Yes, sir.
So very broad. Valuation and taxation of gifts. Did we see this? We did, right?
Yeah.
So many questions for you. Some are past questions, some are new questions. Chargeable income of a person from business. You learn allowable deductions under the law. Okay, all of them. You see, interest, deduction of financial instruments. You learn all of this. Then you learn our good friend capital allowance. Very broad. Trading stock and all that. Realization of asset capital allowance. Capital allowance alone, the questions are more than 30. Okay, questions. These are all questions.
Okay.
Questions. I don't see, this book is a self-tutor. Not only this book, all my books are written like that. You can ask everyone. They are self-tutoring in nature. With our guidance, I don't see why you should fail. When your friends are taking award, you can even take more. You see questions. Questions don't want. There are some things that you are not supposed to even be there or delete all. You see, other reliefs and deductions that we saw, you see them. Industry concessions. When you are in agriculture, farming, free crops, you pay 5% for the first 10 years of assessment from the date of first harvest. It was 1% before June 2023. Free zone companies, young entrepreneurs, locational incentives, people who manufacture, assemble vehicles, additional deduction for fresh graduates. And you see there's a question for you, mortgage interest deduction. I mean, questions on mortgage interest. Come and look at how to compute income from business for sole proprietors, employment income, including casuals, temporary staff, right? You can see it. Basic salary, how do you compute it? Overtime, bonus, all those things, clothing allowance, transfer grants, bonus and overtime. You see, there are so many questions for you there. You have benefits in kind, right? Perquisites and personal liabilities, vehicle benefits, accommodation, loan benefits, the use of domestic servants. You have income from employment that are exempt. All of them are there. Then we start computing full employment income. The deductions and reliefs are also there for you. The questions, withdrawal from your provident fund, upfront reliefs. You can see them, life assurance relief. Hardly will you get it, but you need to know. Then a full assessment, right? Then we deal with casual workers. Who are they? Temporary workers, part-time workers, employers' responsibilities for tax withholding, how to calculate payee. Questions on employment income, right? You see, question 1, simple. Question 2, simple. Question 3, loaded. Question 4, I believe is loaded as well. Question 5, loaded. And you come to how to calculate income for individuals, right? Look at their format, SUSU. Those who do SUSU quarterly payment tax stamp, those who do SUSU retail trade, SUSU collectors, business bakeries, business centers, estates, and the rest. All of them, you learn the modified taxation principles. This one is there, but I'll delete it, right? Something like net worth at your level, I'm not sure they'll ask you. I'll delete some of them. Foreign tax credits, that's double taxation relief. You are going to learn how to deal with this, and then you should be fine. I mean, very detailed. If you do this even at the advanced level, you won't struggle because you know tax as tax, and there are so many questions. Plenty. You see them. Plenty. Now, assessment of partners, as we saw, you see partnership is here for you with a lot of questions to try your hands on. A lot of them. the informal sector. Syllabus reference D, you see the way it comes. Explain and compute corporate tax liability. So you see, there's company, the scope of company tax, definition of companies, basis period, all that accounting year, computation of taxes for companies, all those things, you can see them here, right? Yeah. So basically, I mean, everything is there for you. Syllabus reference E, explain and compute the taxation of gains, you see. It's just the same thing in your syllabus and more. Just walking through everything for you so you see what we are preparing. We are preparing so hard to make you pass, right? VAT, syllabus reference F, explain and compute VAT customs and excise. You can see value-added tax, what it is, VAT mechanism, advantages, VAT registration requirements, exception regarding thresholds, right? VAT certificates, registration of divisions, individuals, partnerships, cancellation of registration, benefits of VAT registration, structure of the VAT Act, way to compute VAT, taxable persons and taxable activity, taxable and non-taxable supply, the nature of supply, other supplies of goods and services, classification by mode of supply, that's zero rating, exempt supplies, relief supplies, mixed supplies, time and place of supply, invoicing in VAT. I mean, this diet is going to be very fun with a lot of questions. Even communication service tax is in there for you because it's in your syllabus, but it's hidden. It's part of that. Everything, VAT adjustments, discounts allowed, deductible input taxes, communication service tax, you can see, TST. VAT components and separation of VAT components. Questions on VAT, computational questions, reading questions, submission of VAT returns, use of representatives, VAT schemes, withholding VAT, flat rate scheme, computation of custom duties, you see, how to compute duties, every kind of duty, a lot of them. You have to compute duties. So many questions on computation of duties. Exemption from duties, duty drawback, duty remissions, they are all there for you. Excise duties. These are all excise duty computations. So many questions, right? You can see. Customs warehousing, we saw it when we were reading. You can see all here. Excise tax stamp. Syllabus reference G, understanding withholding taxes. You see just how it is structured in the syllabus. You see withholding taxes, what are they? The different kinds of withholding and all that. So I believe everything that you have, you will get it, right? So this is the textbook with so many questions, and the question and answer bank too has so many questions in there for you to answer, right? So many questions, you can see. I mean, I believe in practice, rent taxes, practice. So you'll be fine, right? All right. So that was today's session. I believe it was a good walkthrough. I believe it was a good walkthrough.
Yes, sir.
So syllabus reference H, how information technology has influenced taxation. I told you this is a new area. Yes, there's information here. The implications of IT for tax practitioners, effect of IT on modern tax administration, electronic tax account and e-invoicing, the e-VAT system, you can see the legal framework, artificial intelligence, data analytics and automation, challenges and ethical considerations, then what? Explain the importance of ethics in tax practice. ethics in tax practice, the ethical dimension, right? The professional ethics in accountancy and tax practice, the ethical threats, managing ethical threats, importance of ethics, identification of dilemmas. We saw non-compliance with the tax laws, right? Failure to file, under-reporting, overstating, non-payment, the taxpayer risks, right? We saw all these things when we're talking money laundering, placement, layering, integration, implications for tax practitioners, common indicators of money laundering, exercising professional skepticism and judgment. Do you remember we talked about it? So what is professional skepticism? Key aspects of professional skepticism. Then the whole syllabus is done. So that brings us to the end of our session.